You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, this is a switch. If you're looking to invest, normally our neighbors to the north in Canada are investing in the U.S. But here's a deal for you that seems really, really good, high potential for profit, and you can do it as an American investing in Canada, if you can believe it. Matthew Ablakan is with us now. And Matthew, hey, we really appreciate your coming on. You mentioned your parents were immigrants to Canada from a communist country. You got into, explain to us what you do. The name of the company is the Millennial's Choice. So maybe you should be talking to my kids, but Millennial's Choice group of companies. Tell us what it is exactly you're doing and why it's a good deal for Americans to get into.
For sure. And thanks for having me on. It's not easy to create content, so kudos to you. So my background, my parents, they came to the country, they met here. They have different stories of how they got here. Like most immigrants, they get into opening up a business because their educational credentials didn't transfer over. So they got into coffee shops and convenience stores. And my brother and I started joining them on the weekends and going to wholesalers and cash and carry MVRs and buying products for a low price, selling it for a higher price to make a profit. So buy low and sell high was ingrained in us at a very early age. So you fast forward that, I was very entrepreneurial in high school. I was selling stuff out of one of my lockers. I had 2 lockers. And then whatever I could get my hands on, I'd go to Chinatown, buy stuff at bulk, and come up to Vaughan, where we're from, the Greater Toronto area, and we would sell stuff to the people here. So my parents drilled in me, go to school. So I did go to university. My undergrad was in law. I did that concurrently with our teachers college program here. So never applied to the school boards. I graduated, but I never applied to be a teacher because when I was 19, I bought my first pre-construction condo. Pre-construction is very simple. You work with a reputable developer or builder. They're building typically like a subdivision, so lots of homes, or if it's a condo building, there's lots of units. And these things take time here in Ontario because our cities have such backlog and there's so much politics that goes on. It takes about 18 to 24 months for a city to even approve a project. And that's before any sales and before any construction. So you can imagine that once you've secured a property as a developer, a piece of land, you got to design it, you got to go through all the motions, and then you got to wait another almost 2 years to deal with a municipality to approve it. Then you get into your sales, and then you get into your financing and the locking in of your trades and different people that work on the project. So there's a lot of time. And for real estate investors, we know that it's not about timing the market, it's about time in the market. So you can lock in your price, and it'll take 3 to 4 years for it to be constructed if it's a condo building. And you've locked in your price, you put in your deposit, and then you get a mortgage when it's finally built 3 or 4 years from now. So you don't have to worry about what's going on in the rates in the market today. And if you don't qualify for a mortgage, but you may in 3 or 4 years because you're getting into your career, you're earning an income, you might be married, you'll have a secondary income. These are all some of the benefits that come with that. Plus, our government backs everything up. So worst case scenario, if a project cancels because of financing or some other reason, you get your money back within 2 business days. And that's the only thing you lost is opportunity cost because you didn't put your money to work somewhere else. So 19, I buy this first condo, and then I get my real estate license and I teach people to do what I'm doing. That starts to grow really well. So I start bringing on people to the team. We're a small team now, we're 6 people, but we're very efficient. And then I start growing the brokerage. So I launched the Millennial's Choice brand. I start thinking, from teachers college, they taught us to work backwards and think backwards. When you're creating an assessment for students, you have to give them all the information so they could properly complete the assessment. So backwards approach, let me build a business that maybe one day I can sell, have a nice client list of people that we can actually get to know and work with each other. They're not another transaction. Bring an education-based approach to sales. and keep growing the portfolio. So every year I was growing my real estate portfolio, and I've kept all my properties with the exception of one, which I sold to purchase my primary residence with my wife. So it's been a great journey. I'm 31 years old. I just passed my 10-year mark, and I'm excited to see what else the next 10 years has.
Wonderful. Hey, so a couple of things about this. So interest rates going higher in the U.S. as well as north of the border. So the question is, what's that going to do to your returns here? If interest rates are even higher now than they are higher in the future than they are now. And the other thing is there a potential for a housing glut where they can't sell these condos, or these condos go down in value? I mean, that's what any normal investor is going to be asking you, right, Matthew?
Absolutely. So great questions. With regards to the interest rates, we can't really speculate where they're going to be at in 3 or 4 years, but definitely they can impact the market. We're seeing them impact the market now. But the good thing is the way our tax structure is set up, you write off all of your interest if you're an investor. So it will affect your monthly cash flow if the rate is higher versus it being lower, but you get to write off and expense all that interest. With respects to can the prices come down? Absolutely. There's no guarantee in any investment. But in Ontario specifically, we have a lot of our land is under what's called the Conservation Authority. So we are not able to develop that land. And so we were seeing in February of 2022, we were seeing 40, 50 offers, not showings, offers on one single property in Ontario, which is nuts. It's not good for realtors. It's not good for investors. It's not good for sellers or buyers. Too much volatility. But the reason being is we have this large millennial generation demographic coming up. They're getting started. They're buying homes. They're buying properties. We have the Gen Zs that are coming up that are interested in real estate for the most part. A lot of them have seen this crypto pump and dump schemes and FTX recently, and the guy just got arrested. Yeah, they just got arrested. So it's a lot of people are kind of moving now to hard assets. Yeah.
About time they arrested this guy here. I mean, really.
Exactly. Exactly. So, with respects to can they go down? Why I mention all those other things is because the cost of construction keeps going up. So the cost of construction keeps rising. We, as a province of Ontario, have invested millions of dollars to creating new trades because we don't have enough electricians, we don't have enough plumbers, and we're welcoming about 500,000 new immigrants by 2025. A lot of them need to fill in these gaps. So it's when you're looking across the board, we're seeing a lot of developers holding off their product launches because the market isn't as great as they'd want it to be. Plus, they can't accurately price a project because I just mentioned they have to go through the municipality, sales, then they lock in their financing and their trades. So if they can't properly price a project, they can't sell it properly. So the big developers just say, you know what, we're going to wait. We'll wait and see what happens in Q2 of 2023, for example, and then they'll launch their project. And so that still limits supply. You have to keep in mind it's going to be ready in 3 or 4 years from the date that it's sold. So it still limits supply. And yeah, I think it's going to be a bigger problem in the future. So positioning yourself now, I think, is key.
Okay. And I find this really fascinating. You don't usually look north when you're looking for investment. Let me rephrase that. I own a lot of Canadian resource stocks from up north, oil, gas, gold, silver. So from that standpoint, yes. But in terms of actual special situations, real estate, I never really thought of Canada as that. So give us an example here, Matthew. Like you did a deposit 4 years ago on X condo. How much? Just give us a real life example.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, I'm going to give you a real life example that we're closing in a week from now. So there was a condo project in Barrie, Ontario. Barrie is a major city. It actually has the second highest rents for one-bedroom condos in all of Ontario and number 5 in all of Canada. So it's a strong rental market, but it's not as expensive as Toronto. It's about an hour and a half away from downtown Toronto. So it's a little bit north of downtown Toronto. Now, we purchased these units. Not only did I purchase a couple of units, but I sold 38 units in total for the developer. So 36 of my clients purchased in this building. I purchased, I'll use my example because I can speak freely on that. I purchased a 1-bedroom unit and a 1-bedroom plus den condo unit. Both of them come with parking and locker, and they're upgraded. You get all your appliances. Everything's brand new, turnkey. There's nothing for you to do. Plus, it's covered under warranty. So if the builder, screws up the paint or the granite countertop is chipped, it's everything's covered under warranty. So I purchased the 1-bedroom condo for $300K, $299,990, so $300K Canadian.
Yeah.
And then the 1-bedroom plus den, a little bigger, I spent $334,990, so it's called $335. We're closing those deals now. So now you fast forward. It's actually not 3 years. It's actually almost 4 years because we purchased them January 2019. So, we're about to get into 2023. So it's almost 4 years. We've put 20% into each unit. So 60,000 on the 1-bedroom and 68,000 on the 1-bedroom plus den. I got the 1-bedroom appraised at $591.
Wow. That's pretty good. So you're getting paid to wait. If you wanted to rent those units out, how much would they rent for?
I rented both of them out already. One tenant paid the whole year up front. One other tenant is going on a month to month, but they are locked into a 1-year lease. And the 1-bedroom plus den is bringing in $2,250 a month plus all of their utilities they pay separately for. And the 1-bedroom unit is getting me $2,000 a month plus all the utilities that they have to pay for.
And that's enough to pay all your carrying costs on the units?
Even with an interest rate of 5.48%, which is what I'm getting right now, which is a little bit higher than what we could have got earlier this year, 5.48%. Not only are all my expenses, maintenance, property taxes, principal and interest being paid, I'm still cash flowing about $100 on each unit.
That's pretty good. And so you put down 20% of each. So on the one, you put down basically 60,000, on the other about 70,000.
Yes.
And so 1,200. So 1,200. What is that? That's 2%.
Yeah, when you look at it from like the cash flow perspective, the cash on cash, it doesn't seem as high, but you also have all that appreciation in the unit. So if you didn't want to keep it and you just wanted to flip it, you can certainly do that. But I don't like to do that. My strategy is keep it and refinance it. So I'm going to wait until Q2, Q3. We'll refinance it, and then also keeping in mind there is no rent control on this building. So the province of Ontario has very strict rent control guidelines for any property that was basically built and occupied from November 15th, 2018 and prior. Anything built and occupied after November 15, 2018 is rent control free. So next year when the lease comes up for renewal, I'm going to see what the market rents are at, which they're trajecting up in our market, and then we can adjust them accordingly.
Wow, so there must be a huge building boom taking place in Ontario because the shackles have been taken off, the shackles of rent control, and now it's everybody, free for all. All right.
Well, yeah, interestingly enough, what the developers are starting to do, some of the big ones, is rather than building these condos and offering them to individual investors, you purchase your own. They're actually trying to build purpose-built apartment buildings where now they can be the landlord and own the building and keep all the units for themselves, because there's this huge need. There's this huge need for it. Yeah, there's this huge need for it. Our federal government is dumping billions of dollars over the next 10 years to create affordable housing. And so I'm just trying to get a small piece of that pie, and that's what we're trying to do here.
It's reasonable. All right, Matthew, Really appreciate you coming on. If we want to find out more about you, connect with you on the web, I take it the website is the best place to go.
Yeah, if you guys want to check me out on Instagram at Matthew Ablakan, I respond to my own messages. Also, I co-authored a book recently with one of the original sharks from Shark Tank, Kevin Harrington and Robert G. Allen. And yeah, they promoted it. They made it a bestseller. We were working on it throughout the pandemic. And so I'm happy to gift it to your audience if they want to visit financialfreedomclub.ca/ebook. Ebook is one word, no hyphen. And we'll get you a copy of that.
All right, as long as you didn't co-author it with Kevin O'Leary, because he was knee deep in FTX.
I know they paid him what, 15 million or something to sponsor.
15 million, probably in crypto that doesn't exist anymore, but nonetheless, all good. Hey, well, if you got a question for Matthew, shoot me an email, kl@kerrylutz.com. Understand Matthew's not a sponsor, and he's just a guest on the show explaining an opportunity to you. And yeah, if you got a question, kl@kerrylutz.com. We'll get you an answer from Matthew. Anything else about the show, just fire away. And when you're on the site, financialsurvivalnetwork.com, in the show notes, you will find a link to Matthew's main site, Millennial's Choice.ca. And while you're there, sign up for a free newsletter. And Matthew, been a pleasure. Thanks so much. We'll talk to you again soon.
Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.